The JSE looks set to open to mixed global markets this morning as traders are confronted by a spike in oil prices while COVID-19 outbreaks threaten recoveries in countries such as Malaysia, Indonesia and the Philippines. Locally, the focus is on COVID-19 as Gauteng in particular contends with a third wave of the pandemic that has proved worse than the first two. Jimmy Moyaha, an independent analyst, joins us now to dissect some of these and other business stories. Jimmy, very good morning to you. So take us through how the markets have opened today.
Morning, Gwili. Rather mixed open, as you mentioned, some global pressure still weighing in on some of the markets. We did see some very positive opens from Anglo Gold off the back of that announcement that they've appointed a new CEO. We saw Sasol trading up about 1.5% off the back of global oil prices increasing. Goldfields is also up about 2%. So one or two of the stocks on the exchange are doing rather well. But as you said, global sentiment is still weighing in heavily on the general direction that we're going into as we start the second half of the year.
Let's talk commodities. Oil cartel, that's OPEC and its associates have still not inked that production deal. Should stakeholders in the sector be concerned?
Well, this is definitely a point of concern to look at, and especially if you look at the reasons why they haven't inked anything into paper. At the moment, we saw just the market's reaction instantly off the back of that is oil's reached highs that it hasn't reached since 2018, just off the back of the fact that they haven't signed anything. But what is very contentious, of course, is the fact that the UAE is not happy with the stance that Saudi Arabia is proposing, and that is that other countries increase their production, but the UAE does not. And they've expressed very clearly that they would like to increase their production in line with the overall output targets that are still in place. Of course, the OPEC countries, and particularly Saudi, are looking to continue to control the price of oil to avoid what happened last year. And as we continue to see this go back and forth, at the end of the day, those that will suffer in the short term while this is up in the air will be those that are still importing oil, such as ourselves. So everybody that's sort of heavily reliant on that. If demand continues to increase and global economic recoveries continue to increase and we start to see an increase in the outputs from various countries, that demand for that oil will continue to rise and we'll see that price continue to go up if they don't reach any agreements.
Yeah, let's talk food prices, Jimmy. It's the global cost has jumped to a 9-year high, squeezing the consumer budgets who are already hurt by the COVID-19 crisis. Now, what's important to note here is that the OECD, that's the Organization for Economic Cooperation and Development, and the UN, they both say that this may ease in the next year or so. Talk us through the factors that are driving this spike in food prices, and will the easing take effect in our context as well?
So, I mean, the global food prices and what's happening around the world is something that is not sort of unique to South Africa. It's not unique to any particular continent. It's being experienced across the board. And it's got a number of factors that are driving it. For South Africa, our factors might be slightly different. But on a global scale, you look at things like global economic output, the cost of raw materials going up. You look at climate change and the effect that that's having on the pricing and on crop productions and that sort of thing. I mean, for example, if you look at Canada last week reported its highest ever temperature increases. I mean, the highest ever recorded temperature in Canada previously was around 43 degrees. It topped almost 50 degrees Celsius last week. And factors like that are going to contribute through global warming to whether or not crop production is managed properly. Nigeria is another country that's complained that because of the rise in poverty on their side, that the producers of food have reported increased levels of theft of production, theft of crop. China's also increased its demand for food production and its demand for food consumption. I mean, locally, what we need to be looking at is the the global food crisis and the global food situation will affect us as we look at our imports. What will also affect us is when we look at things like load shedding, when we look at how that's going to affect production, how that's going to affect the storage of foods and that sort of thing. So our factors are slightly different to the global factors around the world, but at this time with the global, I mean, the OECD has come out to say that they believe that the prices will stabilize and all of that. But if you look at the fact that we're still experiencing growing populations globally, that's another factor that's going to drive an increase in demand. I mean, there's more people on the earth, therefore there's more consumption.
Yeah.
There has been some scientists and some researchers that have said that we're going to sort of phase more towards your plant-based diets, your poultry diets, and your red meat consumption is going to be reduced over the next 5 to 10 years and that sort of thing. I think that's going to largely speak to, so your vegan-based diets and that sort of thing will probably speak to more developed economies than a continent like ours, just purely because of the fact that we still require the primary food sources, and the livestock element of it that we have locally is largely, or is a lot cheaper to farm more sustainably than it is to farm your vegan-based and your plant-based products at the moment. I mean, I'm sure researchers will argue that that is not going to be the case for much longer, but for the moment, with the growing size of populations and with the fact that local people have access to limited resources. I mean, we know that plant-based foods and alternative foods are still coming in at a slightly higher cost as well.
Yeah.
And if people at the moment are unable to afford the basic costs, what more when we start to introduce alternative food sources that are costing even higher. So for the moment, that's going to be a big driving factor there.
All right, very briefly for me, Jimmy, let's end the conversation with some company news. Anglo Gold Ashanti's board appointing Alberto Calderon as the chief executive officer. What do we know about this new CEO?
Well, Mr. Calderon's a very seasoned CEO. He's been in the game for a long time. He's headed up some really big organizations. He's held some senior positions at BHP, which we know is the largest mining company in the world. He's been CEO of the aluminium division. When he was in Colombia as well, he was CEO of the largest coal company in Colombia, which is also the 10th largest in the world. So Mr. Calderon is very seasoned in the mining space. He was also chief commercial officer at BHP from 2007 to about 2011, if I'm not mistaken. He's also served on the IMF and on the Colombian government. And what's important at the moment for Anglo is that Anglo's got big plans within Colombia. I mean, they've got 3 different operations that they're looking to put forward in Colombia with about 38.5 million ounces of resource that they're looking to mine there. We do, of course, know that Anglo has sold the last of its South African assets. They sold to Harmony in September of last year for 300 million rand. So they're looking to focus more on their global operations, and someone with the wealth of experience that Mr. Calderon has is going to definitely be good for them. I mean, the share price at the moment is trading up some 4% just off the back of that news. So I think it's definitely a strategic step that they've made, having looked at the fact that they've had an interim CEO who will now revert back to her position as CFO, and the company's now got that bit of stability back. And I think from a strategic point of view, he's got some interesting plans for Anglo, particularly now, as I said, that they've completely left sort of South Africa from an operations perspective.
All right. Well, there you go. Jimmy Moyaha, thank you very much for your insights there. Independent markets analyst.